Welcome back, guys. Welcome back to the channel. Hope you're all enjoying your day so far. How are we feeling? How are we feeling? Bubbles are making it look like the market's pretty crap at the moment. The market's feeling pretty crappy this weekend. So let me know how you're feeling. Lots to talk about today. Why is the market reacting in the way that it is reacting? Is inflation under control? Are we getting a handle on inflation? Got US data to tell us the reason why the market turned to the downside over the past couple of days. We've got chart requests as always, so we're going to be going through the chart requests. Stay tuned right to the end, guys. It's going to be a good one. Let's get into the video. Right, okay, guys, we're going to start with the fear and greed index. So why is this important and what does it tell us? So the market's run on two main emotions, fear and greed. Remember, it's not a chart. It's not just a candle going up and a candle going down randomly. It's people buying and selling, and they're driven by fear and greed in the market. So this fear and greed index is an important indicator, and you can see the market's cooling off. We've seen on the chart indicators that the market was getting overheated and we needed some kind of a cool off. The fear and greed is telling us that we're completely in neutral now. We were in neutral yesterday. We had a red day yesterday as well. And last week we were a bit more greedy. And just below here, you'll see the chart, the all-time Bitcoin chart of fear and greed. And you can see we're at levels of now, just right in the middle. We're right in the middle. We're completely neutral. We're at 52. So just an example, back in 2020, this is December 2020, before the bull run, things started getting overheated. We had a pullback and then we had the major bull run. And then when you see that the market was fearful, it was fearful, it was fearful. A lot of people don't remember this now. It seems a long time away, but this was the May 2021 crash in the middle of the bull market. So Bitcoin went down to 30,000 from 65,000, and then it went back up to 69,000. Market got greedy again, and you see we come back down, and then the bear market started. So we're in neutral at the moment, and the sentiment is an important thing. It's driven by world macro events. It's driven by a lot of data, a lot of things. One thing is core PCE, and we got the core PCE data coming yesterday. And I'll just read you this article because we got higher than expected inflation. So speculative assets like crypto, Bitcoin, the rest of the altcoins, they have a knock-on effect because people get fearful and go into the dollar, and you'll see that's why the DXY rose. That's why the USDT Dominance rose, and it all has a knock-on effect with macroeconomics. So let's just go through this. So breaking US annual core PCE inflation increases to 4.7% in January versus the 4.3 forecast. So market built in 4.3%, we got 4.7%, and on the back of that, we had the dump off. Inflation in the US as measured by personal consumption expenditures, PCE price index, rose to 5.4% on a yearly basis in January from 5.3% in December. The US Bureau of Economic Analysis reported on Friday. This reading came in higher than the market expectation of 4.9%. So that's the reason why. Right, okay, let's look into the charts now. Right, okay, charts. This is what you all come for. And before we get into this, just want to explain that we've just got a new Telegram channel. Anybody that wants more up-to-date news, more up-to-date information, it's easy for me to contact you guys on Telegram. I'll leave the link in the description below. But new members to the channel, welcome Kane Demiri, welcome Ambi Sivaram, welcome IBY9991, welcome Jack, Snoopy, Crypto Genas, Slim, Pains and Sacrifice, and Michael Eric. Welcome to you all. I appreciate each and every single one of you. Apologies if I've butchered your name. So, right, okay, charts. Got Bitcoin USDT on the daily, and this is the area I said we didn't want to hold. I've done a video on Thursday that we needed to hold, should I say. Done a video on Thursday, and we didn't manage to close below this area yesterday, but we are going to close below that if sentiment continues today to the downside. So watch out, and if we do get close to that, we're probably going to come back and test the previous lows here set at 21,420. So I'm expecting a little bit more downside on Bitcoin. Just chuck a fib on here and see where we are with that. 236. So currently testing the 236. If we fall below the 236, come back down and expect to test the 382, which coincides with this previous low, and that is set exactly at 21,482 on Bitcoin. So that's interesting. Right, you guys asked me to talk about correlation, so we can. And this we talked about on Thursday as well. And this is what we expected to happen on Thursday, is you've got a double bottom here. We were at strong support on the USDT dominance. So this is the dominance of the stablecoin US dollar tether against the rest of the crypto market. It's currently sitting at 6.97%. Down here, it was 6.44%, and then we had the rally that we expected. So we were sitting at strong support. We expected a rally in the USDT dominance. And what happens when we get a rally in the USDT dominance? Remember, we get a drop in crypto, we get a drop in Bitcoin. So this is why we look at correlations. You can see strong support here, double bottom, strong support. Price is giving us clues. Strong resistance, price is giving us clues. So that's the reason why we look at that. We can look at the Bitcoin dominance as well. And you can see that we've had a few down ticks, only just a few red days on the Bitcoin dominance. And that's probably on the back of a lot of people going into stable coins, USDT and the like. But overall here, we're making a series of higher highs and higher lows. So bit of an uptick over the past few weeks in the Bitcoin dominance. People wanting to dip the toe in the market. People are wanting to dip the toe in crypto, but they're going into the most off-risk crypto, which is, of course, the market cap leader, Bitcoin. We've got the DXY, and remember, we talk about this as a correlation as well. We've had a nice break, and we've been following the DXY right from the top here. We talked about it on the channel that we had the break here, and this was good for crypto. People were coming out of the dollar and going into more on-risk assets, such as speculative crypto. So we've had a break here, so sentiment's changing, and you can see that we've had a few strong green candles here on the DXY. So people are getting a little bit more panicky, and this is on the back of the core PCE data that we talked about. Had a couple of requests. A couple of requests at DOT. Let's have a look at DOT. It's looking pretty weak, DOT, at the moment. So just check a fib on there, bottom to top of this move. Is it holding anything? Touching the 382. We had a reaction from the 382 on DOT. So you can track the trend line down. You can track the trend line down on DOT and then monitor a break. So if you were looking at DOT, you were looking for an entry, sentiment would change here when you get a break, confirm break, and then tight stops below on DOT. So it has run quite well. How much has DOT run? Percentage terms, bottom to top, 87% this move. So if you did take it early on, time to take profits, watch the trend come down. Once you get the break, tight stops. The other one, KDA, Kadena, same. This is area you want to hold. $1 exactly, break below $1 exactly, and then it's looking like you can get that cheaper. So none of this is financial advice, guys. I'm just showing what the charts are saying. Right, okay, I hope you found it useful. Let me know in the comments below. Share with your friends if you're already a subscriber. And if you're not a subscriber and you do find it useful, guys, consider subscribing, notification bells, and you'll be notified. Don't forget, follow our Twitter, follow our Telegram. Take care and speak soon.